Good morning, this is our latest market news. I am Uliana. Asian stock markets on Friday joined the overnight sell-off on Wall Street and in European markets after European Central Bank President Mario Draghi announced less stimulus measures than the market consensus had expected. While Draghi announced an extension of the ECB's asset purchase program until March 2017, investors seemed disappointed that the bank didn't go further. Meanwhile, remarks by Federal Reserve Chair Janet Yellen in her testimony before the Congressional Joint Economic Committee seemed to indicate the central bank remains on track to raise interest rates later this month. In late morning trades, the benchmark S&P ASX 200 index is losing 1.66%, Nikkei 225 index is declining 1.63%. Markets scrambled to cover euro shorts through trade on Thursday after Mario Draghi and the ECB failed to meet market expectations in delivering an expansion to its quantitative easing program. With markets anticipating at least a 20 basis points reduction to the deposit rate and an increase in the monthly bond buying facility, today's announcement simply falls well short of market expectations. The euro surged through recent resistance levels, breaking through 1.0950 and touching session highs at 1.0981. In the context, the euro is still markedly below October highs and the ECB has left plenty of room to extend the stimulus program, while the long-term forecast remains relatively unchanged. Today's main event is undoubtedly the monthly jobs report from the US. After yesterday's less-than-expected delivery from the European Central Bank, investors are probably still coming to grips with the big price changes and what the ECB plans to do next. US November employment report 13:30 GMT. The consensus forecast expects the non-farm monthly payrolls to have increased by 200,000, a good solid number after the October surprisingly large increase of 271,000. After years of steady and solid jobs growth and declining unemployment rate, and despite the occasional scares when the monthly jobs increase has fallen toward the lower end of its range, the path seems clear. The Fed has good enough numbers to hype. It was the latest market news provided by Alka FX. Goodbye.